Right, good morning then, folks, as we head into European trade on a Tuesday, the 5th of September. A pretty negative morning across the board in financial markets. We had the RBA out this morning and some Chinese data, which has failed to inspire certainly any of the Asian currencies, as well as Asian stock indexes. You see downside across the board in stock indexes, obviously off the back of some weak Chinese data, which continues to disappoint. We'll come across to that now in a minute once we get around to it on the economic calendar. But the RBA, one of the two main focuses of attention as markets believe that the RBA are done with their hiking cycle. That's certainly what futures markets are implying. Now, there was clear expectations for the RBA to hold rates steady at 4.1% for the third consecutive month. They do still say they lean more on the side of being kind of slightly more hawkish and potentially more tightening to come, but you have to think that the way the economic data is likely to come out from many of the respective nations across the next number of months, it's probably likely to mean that no more hiking is needed, especially with interest rates only being a 4.1% in Australia. You can see interest rates in the US especially 1.4% higher already, and still potential for them to go a little bit further. Against currencies like sterling, again, they're likely to see interest rates lower in Australia. Couple that with New Zealand as well. Again, New Zealand up at 5.5%. So you're likely to see interest rates in Australia be lower than a number of different countries as well, deep into 2024. So for a good year to come, lower interest rates in Australia than the rest of a number of other nations. So negative for the price of the Australian dollar. I wouldn't say completely dovish, but the fact that they are not likely to hike interest rates again, and interest rates in Australia are lower than a number of other countries, that is negative for the Australian dollar. Going forward, you would have to imagine. Chinese data. Asian shares slide as China optimism fades. There's a couple of numbers last week that maybe thought, okay, maybe Chinese are doing a little bit better in the recent month, but services PMI overnight substantially below consensus, albeit slightly above that 50 number. With the PMIs still quite substantially below consensus, so markets have not taken that as anything sort of positive as we head into trade for today. Now, bank holiday in the US as well. We'll have to look back at the data from last week, with the unemployment rate rising 0.3% in the US. Unemployment rate rising is not good for markets across the board. And you can see relayed across here. You can see European or US equity futures red across the board, European equity futures red across the board, Asia Pacific equity futures red across the board, commodities red. Oil slightly higher, but it's pretty flat. You'll see when we go around to the charts, and the fact that it's up 0.16% doesn't really matter at all. The fact that yields are slightly higher in the US maybe a bit difficult to work out, especially when you saw that weak economic data last week. But I would say the US dollar is up more off the back of a bit of a safe haven play. As you can see, stock indexes and commodities down across the board. Australian dollar weaker currency across the Asian session, which is to be expected. It's got that the kind of dual aspect of downside off the back of the RBA. Somewhat disappointing, maybe not disappointing today, but looking like they will disappoint going forward in terms of their interest rate, their terminal rate in relation to other countries. So negative for the Australian dollar in terms of the Australian economy. And then you look at China, where the Australian dollar is a good proxy for the Chinese economic data. So negative Chinese data, RBA dovish, equity futures lower across the board, commodities lower. That is just a recipe where the Australian dollar gets hammered, and it has been hammered over the course of the Asia Pacific session, and continues to get hammered as we head into the European Open. The New Zealand dollar down in line with that, but everything else relatively mixed. You got US dollar strength across the board, Aussie weakness, Kiwi weakness, stock downside, and that is where we are at as we head into trade on today's European session. And it's pretty negative across the board today. It's not like it's just a little bit negative, things are substantially negative, and it's not looking good for markets as we head into European trade today. And we can see this services PMI 245 from China, consensus for 53.6, previous 54.1, actual 51.8. So it's pretty negative. in terms of consensus is slightly above 50. So it's, I mean, I wouldn't say that that number is the worst thing in the world, but this trend is pushing lower. You know, it was up at 57 and down to 54, 54, 52. And the downtrend in that figure is, you know, pretty clear. Do we see it below 50? The next print is probably what markets are fearing. As we head into today's trading session, we've got a speech from Christine Lagarde. Let's see what she has to say for herself. But in terms of economic data over the course of today, not really too much to go off other than that services PMI and the RBA. Sorry, a bunch of services PMIs out of Europe, which we'll keep an eye on. The fact that that was slightly negative out of fact that that was slightly negative out of China, and that has resulted in a bit of risk-off trading. I would say, you know, these, if they do affect the euro and these come in negative and affect the euro and send euro downside, it should just increase strength in the US dollar. As you know, when the euro pushes lower, US dollar normally pushes higher. So yeah, that could be, and that will be another reason for maybe continued US dollar strength over the course of today's session. And that is personally what I would keep an eye on as we go in, or as we head towards today's European session. You can see US dollar strength across the board. It's most pronounced in the Aussie and the Kiwi, obviously for reasons that we have suggested. You know, dollar CAD pushing higher in line with commodity being slightly under pressure, albeit Canadian dollar is highly linked to oil. Commodities across the board moving lower. It's not good for the Canadian dollar. But across the board, you can see Aussie, Kiwi, Euro, and Sterling all pushing to the downside. You can see dollar Swiss, dollar CAD, dollar yen, the dollar index all pushing to the upside. So pretty broad-based US dollar strength. But this Euro dollar chart isn't exactly moving lower at any sort of an aggressive pace. So if those European figures come in weak and this accelerates to the downside, that is likely to keep this dollar move going across the board. Stock indexes look like they want to roll over in the US. Take into account we did have the bank holiday in the US yesterday, so the S&P, the Dow Jones, the Nasdaq, and the Russell, not much trade yesterday, but downside in Germany, across the DAX, across the Euro stocks, downside across Europe, not Germany, across the DAX and the Euro stocks. You know, FTSE pushing lower as well. So again, just negativity, global concerns off the back of China, but negativity, you know, with you know, a lot of European companies linked to China. Negative Chinese data does affect the European equities quite substantially. Then FTSE pushing lower as well, as likely to put some pressure on the US stock indexes as well. They look, just from a charts perspective, like they kind of want to roll over again. But as I said, bank holiday in the US yesterday, not a lot of liquidity, maybe not too much to see there just yet. So need to keep an eye on them as we head into today's European session, but certainly across Europe, pretty negative across the board as we head towards European trade today. US yields not open for trade yesterday, doing absolutely nothing yesterday. So we do have to wait a little bit to see how they open up for the for the day today. The S&P we just spoke about. Oil chopping sideways, so I said it was a tiny bit higher. Wouldn't that really make much of a difference? I would suggest probably not. Gold chopping sideways as well, so difficult trade across a lot of assets yesterday, but woken up this morning, markets catching up with it for a bit of US dollar strength, across the board. And if that continues, or these numbers continues to be weak, maybe you get some negativity from a Christine Lagarde speech, or these services PMIs. If the services PMIs come out weak, you'd have to imagine euro dollar downside continues, and that should continue the US dollar upside across the board. And that is what I'll be focusing on as we head forward into today's European session. But bank holiday in the US yesterday, so you know, I could be a little bit careful, as today is their Monday, so not as much liquidity as an average Tuesday. So maybe err on the side of caution, but US dollar strength, stock index weakness is the main focus of attention as we head into European trade today.